Shares of Peloton are still down 95% from their peak, but they are up about 78% over the past year. So things are starting to go a little bit better for Peloton. And the strategy changes that the new CEO, who was brought in less than a year ago, has brought to the company are starting to pay off. So thought it was time to dig through Peloton again. This is not a stock that I've owned in a while. I think some of the changes that they made and some of the momentum that they had with their user base really turned me off from the potential upside for Peloton, but it may be back again. So let's dig through this company. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. I wanted to start with some of their recent results because there's some big changes that have been happening at Peloton with their strategy, but they've also done a pretty good job delevering their balance sheet. So this was one of the challenges over the past few years is they actually took on a lot of debt. Now that net debt is down to about $500 million. That will fluctuate a little bit, but hopefully over time, they're going to be able to get that number down to zero and eventually potentially eliminate that debt altogether. I actually don't think it would be all that bad to just sell shares and pay down that debt. Just takes the risk out of the business and it takes the cost associated with the debt out as well. But not something that they're doing right now. When the new CEO, Peter Stern, came in, he said that he was going to change some of the strategy involved with Peloton. So improve member outcomes, meet members everywhere. So basically broaden the user base in as many ways as possible and then create members for life. Peloton's actually got a pretty low churn, but that's not something that they have done a phenomenal job of, especially on the app side of things. And then improving the operations. This is a business. It's a subscription business. There should be a lot of operating leverage when you start to have millions of users, but they haven't demonstrated that in the past. So what sort of success do we have for Peloton? These are the numbers that you always want to look at for the company. And the concern and the reason that I'm still not an investor in Peloton today is the number of members continues to decline. So down 6% year over year. And the paid connected fitness users, this is the people that are paying basically the full price. They have a bike, they have a treadmill, something like that. Also down 6%. Now churn is not terrible, but they don't have new people coming into the ecosystem. And I think this is really the challenge for Peloton is how do they attract new people when you're not in the middle of a pandemic when everybody's stuck at home and they decide to, buy bikes, sign up for digital fitness classes. This is just not all that compelling of a business right now. And then their app, which is really where I thought there was a lot of potential to get more subscribers across multiple different platforms. So you have people who are at hotels. You could bundle in with other devices. They had a partnership with Lululemon. I thought there was an opportunity to really get those digital products into more and more places, into other people's bundles. They have not really done that. And this business is really declining at a rapid rate. A monthly churn on their app of 6.4% is just crazy. That's a completely unsustainable business. But all of that said, the financial results are getting a little bit better. So revenue is down 6%. That's not the trend that you want to have. But the connected fitness products, this is going to be the hardware, their margins are actually improving pretty nicely. Now 17.3%. A few years ago, this number was negative. And their subscription contribution margin is 75.4%. So even that margin's going up. So the total gross profit, despite the fact that revenue is coming down, the total gross profit for Peloton is actually going up about 5% in the past year. So that's the right direction. Now, you want to have the revenue turnaround, and that's what we're not seeing. So the bottom line, the costs are improving, but the top line is not improving. Also, these operating expenses, these have been coming down for years at this point because they had to, but operating expenses down 20% to about $300 million in the most recent quarter. That means that they have a small net profit on their hands in adjusted EBITDA, which is going to pull out things like stock-based compensation, $140 million. And there's even positive free cash flow. So at that rate, you're talking about a positive cash position potentially a year from now, maybe a little over a year from now. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. But here's the fundamental question with Peloton is this market big enough to be a sizable business? And that's where I just don't have a positive answer right now. This could be a bounce off of lows where Peloton is not a business that's going to die. It could potentially be a business that generates positive free cash flow, has really happy members, but it isn't going to be more than the business it is today. And so if that's what they're going to be, if that's what Peloton's future is, then you need to look at this as a value stock. And Peloton's enterprise value right now $4.3 billion. If you look at the run rate of free cash flow, about $500 million, that's a reasonable price to be paying for a company that's generating that kind of cash. Now, like I said, you do have risk with the debt on the balance sheet, but this is really the fundamental challenge for Peloton. Is this a growth company or not? Because if it's not, and you're just looking for positive free cash flow, that can be a fine business, but I don't think that's where the company ultimately wants to be. But how do they get back to the point where they're going to grow that number of users, grow the number of people who are paying them, even for an app subscription? And I don't think there's a clear answer right now. That's why I don't own shares, and I don't think management has given a full answer to that. I like some of the tools that they're building, but sometimes I think those tools would belong better within a bigger company like a Garmin. So maybe an acquisition ultimately is where things are going for Peloton, because I think these platforms are ultimately really important, even in healthcare. But let me know what you think about Peloton stock. Leave those comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.